Hey traders, welcome back to FX Action Trader YouTube channel. My name is Chuan and today I'm going to share with you two trades that I've taken on euro dollar, and from these two trades I have made over 200 pips. So I'm going to share with you the complete breakdown of these two trades, including how I get into the market direction, how do I build out all the conferences, and how do I make my entry decision, and also how do I exit the trade. So please make sure that you stay until the end of this video in order to not miss out any details of these two trades. And also, before we start, please make sure that you have subscribed and turned on the notification on our YouTube channel, and also follow us on Facebook and Instagram to get more updates from us in the future. So let us roll the intro before we jump into the chart. So the first pair that I took was actually a sell trade on euro dollar. So let us have a look on daily chart for the first trade analysis. So on daily chart, we have to identify the current market trend. And from this daily chart, we can clearly see that market is now sell bias instead of buy bias. So why do I say so? So on the previous trend, market was in a very strong uptrend where market has created lower high and also higher high. Sorry, this is supposed to be a higher low, where market has created higher low and a higher high. So whenever market is keep on creating higher low and higher high, market is in a very clear uptrend. But we can see that after market reached a new high level of 1.2328 level, market started to have something like a downwards movement, and this strong movement has actually broken the previous higher low at here. So in order for market to remain in a bullish trend, market will need to respect this higher low level and continue to create a new high for trend continuation. But at this case, market did it the other way around. And at here, we can see that market has actually created a low, a lower high, and also a new low. So when market created a lower high and a new low, market is more likely to have a trend reversal or more likely to enter a ranging period. So at this time being, we should switch our direction from a buy trend to a downtrend. And once we have looked for downtrend, the third thing we have to do is that we have to look for key levels on the daily chart. So at here, we can clearly see that market has retested this key level, which is also the lower high level for a very long period of time. So this key level was previously a support zone, and now this key level has turned into a resistance zone. And the third thing we can see is that market has formed a very strong bearish engulfing candlestick after retesting this zone. So at this moment, we should only look for a short trade instead of a buy trade. So once we have identified the direction on our daily time frame, we need to scale down to our entry time frame. And for this trade, I use 1 hour chart as my entry time frame. So on 1 hour chart, the first thing we can see is market has actually did a very strong movement to the downside, and market is now in a pullback phase, or market is now doing some sort of retracement. So the second thing we have to do is that we need to find the key level on the 1 hour time frame. And from here, we can clearly see that market is at the key level around 1.209, where this key level was previously a very strong support zone, and this key level has now turned into a resistance zone. So the third thing is that we have to look for the entry signal that align with our daily direction. So in this case, we should look for only sell signal, and we should ignore any buy signal in order to prevent us from counter trend trading. So at here, market has retraced to the previous key level, and what we need to do now is we have to wait for the entry signal for the sell trade. So let us keep the market moving. So market has shown us something like a bearish engulfing candlestick here, but for me, I would prefer for confirmation like market is going to do a new low or a new lower high in order for me to confirm that the downtrend is about to begin. So let us have a look. So from here, we can see that from this pullback phase, market is currently in an uptrend for the pullback phase, and the market has created this level. So this level can be interpreted as a higher low level, and market has created a new high at here. So if market is going to pull back higher, market will need to respect this higher low level and going to push up for a new high level. But at here, we can see that this higher low level was broken with a very strong bearish engulfing candlestick or a very strong bearish momentum. And what we need to do is that we just wait for the next confirmation signals or next confirmation chart pattern. So let us keep the market moving. So market has started to move downwards and creating a new low. But this is not enough confirmation for me to make my entry yet, as I know that market is going to do a pullback to retest this key level. So market now is doing a pullback to retest this key level. And what we can see is that market has created something like a double top pattern, and this bearish engulfing candlestick is my entry signal for the sell trade. So in case you cannot see the double top pattern, you can always switch to a lower time frame such as M15, and from here you can see that market has actually did the first top, did the second top, and market has also broken the uptrend trend line in order for us to stack up our conferences for a short trade. So at this time being, I have entered a short trade based on these conferences, and I put my stop loss very safe just right above my key level. So the next thing is, where am I going to place my take profit area? Since this trade is aligned with our daily chart time frame trade, is aligned with our daily chart time frame trend, so I'm going to put my take profit level at the next key level of daily chart time frame, which is at here. All right, this zone was a very strong zone where this zone has been a very strong resistance before, and now this is a very strong support zone. So on our H1 time frame, we have placed our sell entry order, and what we need to do is that we just need to set our trade to break even as soon as possible whenever we are running in a profit. So whenever we have a profit like this, we have to set our trade to break even, and we just let the market to do the rest. And this trade takes me about 3 to 4 days to hit my take profit level, and this is a very clean trade, as market did not do a deeper pullback and market just go according to the trend based on the daily chart. So now let us have a look on the second trade example. The next trade that I took on euro dollar was actually a buy trade, and this trade was formulated based on H1 chart for the direction and also the entry reason. So let us jump into this trade. So from the previous trade, we can see that market has retested the previous key level on daily chart at 1.18562, and we can see that there are some bullish rejection at this key level. And if we notice on the H1 chart, market is in a very clear downtrend on H1 chart, but in order for market to continue the downtrend movement, market will need to respect this lower high level, meaning to say that if market is going to continue the downtrend movement, market need to respect all the lower high level. But at here, we can see that market violated the lower high level and market break up this level with a very strong bullish momentum. So at here, market is likely to do a deeper pullback to the upside, and we are going to look for some very quick buy signal for this pullback. So let us have a look on the most recent market structure. So if we are going to focus at here, market has created a new high, a new higher low, and a new high. Meaning to say that if this higher low level is not broken, market is more likely to move upwards instead of downwards. So we are going to look for a buy signal at here. So let us have a look. So market did something like a fake breakout at here. This is a fake breakout. Market has broken down this level, pretend to be the new low, but market break back into this ranging zone with a very strong bullish momentum. So, and here we can draw a very quick trend line at here. So this trend line has already been broken up, but for more confirmation, I will need market to break this previous high level. All right. So let us have a look. So market break back into the zone, and we can see that market break out of this entire ranging zone and also break out of this previous high with a very strong bullish candle. And this is also a bullish engulfing candlestick, and I made my entry based on this price action and with a very safe stop loss just right below the bullish engulfing. And for risk and reward ratio, I've taken about 50 pips as my profit and 30 pips for my stop loss. So market did a pullback but got rejected at here, and when my trade is running in profit, I just set my trade to break even and I will let market to do the rest. And this is also a very clean trade where I got my take profit hit less than a day. So these are the two trades that I've taken on this week, and these two trades has made me a very good profit from this. Alright, so I hope that you guys have learned something new, or you guys have gotten some new idea based on my breakdown for these two trades. And if you like my content, please do subscribe to my channel for more updates. I'll see you guys in the next video. Goodbye.